asking for like
Please reacting poll section. Hello, am I audible? My mic is on. Hello, am I audible? Okay, so friends, I think I am audible now. So let us begin the class. Okay, okay. So friends, first of all, I would like to give a warm welcome to the class of Inspire Education. So friends, we are going to prepare for WO exam. As a quick introduction, I would like to say that I have cleared the recent WO exam. So here I will try to go with the process actually I have followed for preparing this exam. So to be frank, this exam has not been easy for me. I had to study really hard. I had to go in detail for every topic, and as the exam is descriptive, as you know, and the question may be asked from any topic. So I had to understand almost everything that comes under this WO syllabus. So basically, going in detailed study of every topic is very much needed for clearing a descriptive paper because you cannot by heart full book, you know. So if you understand any topic, so no matter whatever difficult question that may be coming to you, you will at least present your views and score some marks. So at my very first day, I would like to request you all to go for detailed understanding of the topic you read. So I hope you have GFR 2017 book with you. And today's first class we will be starting with GFR 2017. Here we will be guiding and give our best. Okay. And one more thing I want to clear that this is my first time. This is the first time I'm in my life I am taking any class. Okay, and I hardly speak English in my day to day life, and in fact I am little bit nervous about it. Okay, so please excuse, forgive whatever my mistake in English because I am not so fluent. Sometimes I might fumble. So okay, so let us begin. So, so today's topic is our GFR 2017. So, as a quick introduction of what is GFR, let us see what is GFRs. So, GFR is a financial rules, general financial rules, are a compilation of rules and orders of Government of India to be followed by all while dealing with the matters involving public finances. So whatever the matter relating to our day-to-day account office, accounting or office related subjects, we are basically dealing. We will be dealing with the rules contained in GFR. So in GFR 2017, we have got 5 chapters. So 5 chapters we have to go through. First is our introduction. Second, general system of financial management. Third is our budget formulation. And six is procurement of goods and services. And last one is contract management. So going with first introduction, in introduction chapters, there are some important definitions that we have to go through. Okay. The first is our accounts officer. So accounts officer is what? Accounts officer means head of an office of accounts or head of a PAO, pay and accounts office, set up under the scheme of departmentalization of accounts. So departmentalization means there are various departments, you know, there are postal department, there are railway department, there are telecom department. For each department, we have got different accounts officer. Means uh, in there are different head of accounts are there, and so these are these accounts. The head of accounts are called accounts officer. Like in DAP, in our postal, there is director of accounts postal. So he is called the accounts officer actually in terms of JFR. Okay. So next is our administrator. This is number two. Okay. So administrator means administrator of an union territory. For union territory, head is the administrator. Like in state, we have got governor. Okay. So likewise, for union territory, the administrator means the administrator of the union territory. That is in. So next is number three is very important is appropriation. So appropriation means what? Appropriation means assignment to meet specified expenditure of a funds included in a primary unit of appropriation. So what is primary unit of appropriation? That we have to understand first. Okay. So for primary unit of appropriation, uh, we have to understand that uh, head of account. We have to understand the word head of account. You see, in sanction memo, we have seen sanction memo na. So in sanction memo, in the bottom of the sanction memo, we generally see that for example there is a TA sanction for a particular employee. Okay. So in the in the bottom of the sanction memo, we generally see that this amount is debitable under the head of account. So we see that there will be 15 digit head of account always mentioned in the sanction memo. So head of account, let me write head of account is 15 digit. Okay, 15 digit. So in 15 digit, there is 6-tier classification is there. 6-tier classification of every head of account there. So primarily first 4 digit, first 4 digit will be your major head. Okay, let's suppose there is a 15 digit classification for postal service. That is 4 digit is 3201. Suppose that. So this is our major head. Okay. Next, there will be 2 digit sub major head. Let's suppose 02. This is his sub major head. Okay, sub major head. According to sub-major head, we will understand for which section the fund is being allotted. Let's suppose for if the sub-major head is 01, it will mean admin. Let's suppose there is a salary bill of a particular employee who is working in admin section, like in who is working in division offices. So his salary bill will be processed to 3201-01. In case of 02, it is operation. Okay, operation. So likewise, there will be many more. Like if it is 07, then it will denote pension. Likewise. So after that, there is 3 digit code is there. Let's suppose, let us take 00. This is generally this is called minor head. Okay, this is our minor head. This is also known as program. Okay. Then there will be 320101, 3201020001. Then there will be there will be again there will be two digit subhead. Let's suppose 2 digit. So it will be called subhead. Subhead. So subhead is also known as scheme. Okay. Then there will be again 2 digit. let's suppose it is 01. Okay, this is called, after subhead, 2 digit is our detailed head. Okay, detailed head, and there is the last one is called, last 2 digit is called the, the primary unit of appropriation. It is also known as object head. Okay, object head. This is very very important. Okay, so so this is 01 I have written. So 01 will denote for salary. Okay, likewise, if it is 02, then the wage related bill will be dealt with the object head or primary. If the primary unit of appropriation is 02, then it will denote wages bill, wages. Okay, likewise it may be for medical bill. Let's suppose for medical bill it will be 06. Okay, medical bill it will be 06. And for let's suppose for office expense, generally office expense will deal with we. You can check the sanction memo. Whenever you see, you can relate with it. So what is appropriation? Appropriation means assignment to meet the specified expenditure of a funds included in primary unit of appropriation. So we need assignment to wages bill. Wages bill. If we need fund for medical bill, so whenever the funds are allotted to this bill, means assigned to this portion, then we may call that we have got the budget allocation. Budget allocation for we have got the appropriation for medical bill. Okay, so this is basically appropriation. Is what is appropriation? I think I am clear. Say, next is reappropriation. So what is reappropriation? Reappropriation means transfer of funds from one primary unit of appropriation to another. So let us go back again. So let's suppose the last 2 digit is our primary unit of appropriation. So let's suppose we have got 50,000 in office expense. Office expense 13 is our primary unit of appropriation, and there is we need 20,000 in medical section. So in 06, let's suppose there is no amount left. So by the order of competent authority, 20,000 may be reallocated, reappropriated to from OE to medical. So this is basically transfer from one primary unit of appropriation to another. Okay. So next important definition is competent authority. So who is the competent authority? So here it is mentioned that in respect competent authority means in respect of the powers to be exercised under any of these rules, the president. So always main competent authority is the president. Okay, president of India or such other authority to which the power is delegated by or under these rules. Okay, delegation of financial power rules. So we will be in our upcoming classes there, in our courses there is a book called DFPR 1978. Okay, so in this book there are various authority are mentioned who have got the power, like 50,000 50 up to 50,000 DPS may sanction, above 50,000 CPMG has to sanction the bill. So the powers are defined in the DFPR. Okay, so in DFPR or the president, the competent authority who has got the power are mentioned in these books, or it is written, or special orders issued by the government of India. So according to it, we will decide who is competent authority. Next is our controlling officer. Okay, so controlling officer means an officer entrusted by the department of the central government with the responsibility of controlling the incurring of expenditure or the collection of revenue. So funds, the budgets are allotted to us. Okay, so the main responsibility lies with the controlling officer who will incur the expenditure. So, and he is also got the main responsibility of incurring expenditure and collection of revenue. Okay. So in our case, let's suppose superintendent. So in our division, superintendent is our controlling officer. He is mainly the responsible for all the collection of revenues, like revenue we earn, like speed post, register, whatever, EMO. So the controlling officer also he is entrusted with the responsibility of controlling the expenditure. Also, the budgets are allotted. When the budgets are allotted, we get this budget usually from division office, na. So this is all about controlling officer. The term shall include head of the department also. Okay, and also an administrator, head of the department. Let me clear uh, uh, the head of the department. In our postal postal section, head of the department is generally PMG or chief PMG. Okay, CPMG. Next is consolidated fund. So consolidated fund means consolidated funds of India referred to in Article 266 1 of it will be of okay of the Constitution. So our government account is basically divided in three parts. Okay, first is consolidated fund, second is contingency fund, and third is public account. We will be having a detailed study on this in our next book. So when we will read very important book is GAR 1990, Government Accounting Rules 1990. When we will study the details, study in detail what is consolidated fund, what is the contents of consolidated fund, contingency fund, and public account. So basically, in this session, we just learned that the consolidated fund is defined in Article 266 1 of the Constitution. Likewise, contingency fund, it is defined under 267 1 of the Constitution. Okay, and public account is also defined in referred in 266 2. 266 1 is consolidated fund and 266 2 is our public account. Okay. So definitions are important. So in the point of view of answering the in exam, whenever the definition is are asked, we have to go through the book only actually. So in consolidated fund already in GFR book it is written like this only. So we have to answer this only. Okay. From guard perspective, if the consolidated fund is asked, then we will be giving answer according to that. So we have to read in exam point of view. Okay. Next is our government of account, means the account relating to the consolidated fund, contingency fund, and public account. So I have already told that government account is have three parts: this, and this. So moving further, is the next definition is DDO, means drawing and disbursing officer. So who is DDO? Means an head of office. Okay. Also any other gazetted officer. So designed by the department of the central government. It may be the DDO may be defined defined by designed by central government or by head of the department or an administrator. Okay. In case of Union Territory, it is administrator. So main function of DDO is to what? He can draw the bills and make payments on behalf of the central government. Okay, like SP superintendent can draw bill and make payment to for some extra work, some wage bill. He can make payment now. He can also draw bill. So 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 in our case, we have seen that head of the department could also design any DDO. So head of the department is in our case PMG, where I have already mentioned PMG or CPMG in postal. Okay, the term shall also include head of the department. The DDO may be head of the department also, like in CPMG can be also called DDO, where he will draw the bill. In circle office, he has the power to draw bills and make payment. So he may be also called DDO, okay, or an administrator. He may be also called DDO, where he himself discharges his function. Okay. Next is our head of the department. Who is head of the department? Head of the department means any authority or a person not below the rank of deputy secretary to the government of India, like CPMG, chief PMG. CPMG is the head of the department. Okay, I've already told. Declared by the concerned department in the government of India as head of the department. So, so concerned department will declare who is the head of the department in relation to an identifiable establishment to exercise the delegated financial powers under this rule. Okay. Next is our head of office. Head of office is generally head of office means a gazetted officer declared in Rule 14 of the DFPR 1978, or any other authority declared as such under any general or special orders by the competent authority. So competent authority can declare also head of office anyone. So head of office, I have already told, if we relate with post office, then superintendent is head of office, or maybe senior postmaster also. Is a gazetted officer. Okay. Next is Reserve Bank. Reserve Bank means the Reserve Bank of India or any office or agency of the RBI it will also include any bank acting as an agent of RBI in accordance with RBI Act 1934. So it may be SBI also, who is acting as an agent. Okay. So Reserve Bank, the definition of Reserve Bank is basically this. Then subordinate authority. Subordinate authority is basically what? Any authority or any department who is subordinate to President of India. So all department, any like Department of Post, Department of Telecom, all these are comes under the definition of subordinate authority. It may be department or it may be any authority also. So all are subordinate to President, so it may be called subordinate authority. Next is our important definition is capex model and opex model. Okay, so in capex model, capital expenditure is used by the buyer to straightway purchase a goods, followed by procurement of consumables, arranging comprehensive maintenance contract after warranty period, and finally disposing the product after useful life. And in opex model, what is mentioned in opex model, the seller provides the good, maintains it, and also provides the consumable as required, and finally takes back the good after useful contracted life. The expenditure is made by the buyer in staggered manner. So so basically in capex model is in simple sense. Let's say in our office air condition for rupees 10 lakhs rupees is required. So under capex model, if we buy this, let's suppose there is warranty period of 1 year, and for contract agreement for repairing we have taken another 1 year. So so for 2 years the seller will take the responsibility as in capex model. Okay, for the rectification, repairing, etc. But after that, let's suppose after 3 years, if the AC is found to be completely not working, okay, then seller will not take any kind of responsibility. So, so 10 lakhs is a huge amount. So we may, in this situation, we may have to invest for another 10 lakhs. So there is a loss. So now, if we had buy this air condition under OPEX model, and let's say the AC, the same AC is required for, let's suppose, for 5 years. So in this case, what will happen? Seller will maintain the AC for whole 5 year. Okay, but the condition is that, but after contracted period. Okay, after contracted period, the seller will finally take back the goods. Okay, this is the condition. Means our AC will be returned to seller. This is somewhat similar to rent, like AC has been rented. So in capex model, we buy this like we buy generally our household goods, like fridge is good. But in opex model, we can understand by this that one fridge has been rented from the seller. Okay, so this is about capex model and opex model. So this is important. Next is rule 3. Rule 3 is interdepartmental consultation. So when it says this one, when the subject of a case concerns more than one department, no order shall be issued until all such department have concurred, or failing such concurrence, a decision has been taken or has to be taken by or under the authority of the cabinet. Okay. So let's take an example, like interdepartmental consultation. Like there is in postal, there is RMS. RMS is there. Railway mail service is there. So 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 RMS requires railway coach. Okay, for conveyance of mail. So in this situation, both RMS means post office and railway is there. So anything related to this will be called fall in the category of interdepartmental consultation. Say like for booking of one bogie or coach, there is a price negotiation. So for price negotiation, both the department will have to come into agreement. So this is some kind of interdepartmental consultation. Okay, when the subject matter of a case concerns more than one department. So they have two department come. So this is falls in the category of interdepartmental consultation. So if there is no agreement, then the decision has to be always taken by the authority of the cabinet. Cabinet will decide. Then rule 4. Rule 4 says all departmental regulation of financial character or any item of financial character must invariably made by or with the approval of finance ministry. So finance ministry is the main who can decide all financial matter. Rule 5 is our removal of doubts. Whenever there is a doubt related to financial character, it will based on Ministry of Finance for decision. Okay. Rule 7 says all money received by or on behalf of the government, either as dues of a government or for deposit, remittance, or otherwise, shall be brought into government account without delay. Okay. So whatever due to be government has to be deposited in government account. The rule says, in accordance with the such general or special rules may be issued by under Article 150 or 281 of the Constitution. Like in post office we take savings deposit for on 1/1/2023. So in this case, we have taken SB deposit on this date. So on that very date only, we have to deposit it in our government account. So we have to account this on this very date only. So we cannot delay. So whatever money is received, we have to credit to the government account then and there. So next rule is under Article 284 of the Constitution, all money received by or deposited with any officer employed in connection with the affairs of the Union in his capacity as such, other than revenues and public money raised or received by government, shall be paid into public account. Okay. So this is rule number 8. Okay. So if a officer is having money, like people give deposits to SBRD Provident Fund, these all amounts should invariably be deposited to public account. So here only exception is revenue. So revenue, capital revenue expenditure, capital received, revenue received, all comes under Consolidated Fund of India. And in public account is generally dealt with the whatever amount is public is giving, you will also take, you will be taking it back. So SBRD deposit comes under the category of our public account. So it says that all money received by or deposited with any officer employed in the connection with affairs of union in his capacity and such other than the revenues. Revenue will be dealt with uh, consolidated fund. Okay, actually, and public money raised. This is basic thing or other received by the government shall be paid into public account. So when we read GAR 1990, we will be more clear. We will be more clear it. We will be able to clear it. Okay. Okay. So the head of account to which such money shall be credited and withdrawal of money therefrom shall be governed by the. I already have told that relevant provision of GAR 1990, Government Accounting Rule 1990, and the central government accounts receipts and payment. This is also a book, but this is not in our syllabus. So we have to remember. So the head of account to which such money is credited will be dealt with this or such other general special rule may be issued on this behalf. Government may issue any order related to this. So according to these three, we have to deal with. Rule 9 says it is the duty of the department of the central government concerned to ensure that the receipts and dues of the government are correctly and promptly assessed, collected, and duly credited to the consolidated fund or public account, as the case may be. So it is our duty to ensure that whatever the dues of the government, that means on due to be received, we should correctly and promptly receive it and credit it to the consolidated fund or public account. So I've already told that our SBRD deposits are always deposited in public account and the rest are mainly deposited in consolidated fund. So Rule 10 says the controlling officer shall arrange to obtain from his subordinate officers monthly accounts and returns in suitable form, claiming the credit for the amounts into the treasury or bank, as the case may be, or otherwise accounted for, and compare them with the statements of credits furnished by the accounts officer. Okay, to see that the amount reported as collected have been credited. Accordingly, each accounts officer will also send an extract of his account showing the amount brought to credit in the accounts in each month to the controlling officer. So basically, uh, like in like suppose the controlling officer. Let's suppose circle office. Okay, chief PMG is our controlling officer. Okay, circle office. So, okay, so so circle office will get return in forms of reports from subordinate offices like division offices. So division office will send a report of the collection of revenue to suppose to circle office. Okay. In turn, circle office will also get report from accounts office, that is DAP. So DAP gets the reports from where? From HOs. We generally know that from account branch, we generally we send monthly accounts of actual deposits, actual payments. So all these things are from accounts branch, account section of every HO. We send directly to DAP. So DAP will also give his figure to circle office, and And division office also giving his reports to circle office. So office will tally both this and reconcile the amount. Okay. So here accounts officer means, and you can understand by DAP. DAP. DAP also sends to the controlling officer, and controlling officer also get this from his subordinate officer, like division officers. Okay. And there he then from both after getting from both, the circle office will can tally. After rule 10, then we have an important definition is rule 18. Okay. So rule 18 is remission of revenue. Remission of revenue means uh, remission is means relinquishment. Relinquishment. Okay. So a claim to revenue shall not be remitted or abandoned save with the sanction of the competent authority. So you cannot relinquish the claim. Okay. Let's suppose uh, there is Department of Post. Okay. Department of Post, and there is Department of suppose railway. So there are in Department of Post. Let's say the Department of Post has like say suppose 10,000 rupees due to be received from Department of Railway. Okay, so he according to rule it says that he should not relinquish the claim. He has to collect the amount from railway Department of Railway. So in rule 19, rule 19 or 19, it says that subject to any general or special orders issued by the Government of India, Department of Central Government, Administrator, uh, except Department of Post. Okay, every other department will submit annually on 1st June. 1st June. Okay, on every 1st June to the audit officer and the accounts officer concerned, statement showing the remission of revenue and abandonment of claims to revenue sanction uh, to revenue sanction during the preceding year by the accompanying authority in exercise the discretionary powers vested on them. So, in case there is in usually the remission of revenue is not allowed. Okay, relinquishment is not allowed, but in some cases the relinquishment is done by the competent authority. Competent authority has got every power. So using his discretionary power, if he has relinquished anything, so so the report every year the report has to be sent on 5 June. Okay, to the audit officer. And if the relinquishment is below rupees 1,000, the same may not be, then should not be included on that report. Okay, so basically for 1,000 up to rupees 1,000 rupees, below rupees 1,000, if the relinquishment is done, so in this case no report may be sent. Okay. Rule 21 is our standards of financial propriety. So it says every officer incurring or authorizing expenditure from public money should be guided by high standards of financial propriety. Every officer should also enforce financial order and strict economy and see that all the relevant financial rules and regulations are observed by his own office and by subordinate disbursing officer. Among the principles on which emphasis generally laid are the following. So basically, in Rule 21, it says that when you spend any money from government account, like say for the purpose of say print for office use, like for printer, computers, etc. You should think like you spending money from your pocket. Okay, and you should always try to buy the items in the best possible rate. There should not be anything between authority sanctioning the bill with the seller. Like seller may be authority's known person and he may take advantage by sanctioning more than required amount, then getting this again from uh, getting this money from the seller again. So there may be more like more case like this. So basically, every officer is expected to exercise the same vigilance in respect of the expenditure incurred from public money as a person of ordinary prudence would like to like would exercise in respect of expenditure for the own money. Okay, so this is basically what is about. And next, there is few more points. The expenditure should not be prima facie more than occasional demands. We need three computers for office use. So three computers we need computers. Okay, computers. So just because it is government money, we should not buy more than what is required. We should not buy five computers, six computers. Okay. So next is no authority should exercise its powers of sanctioning the expenditure to pass an order which shall indirectly or indirectly to his own advantage. So I have already told this. Expenditure from public money should not be incurred for the benefit of a particular person or a section of the people unless, so exception are always important. So when a expenditure from public money should be incurred for a benefit of a particular person, these are the exception. It is allowed if a claim for the amount could be enforced in a court of law. In court of law, we can whenever we can say that this amount can be proved in the court of law. It means I have paid this amount, this to a person. So if the court says that yes, this has to be paid to this person, then the claim may be considered. And the expenditure is in pursuance of a recognized policy or custom. If the expenditure is recognized for a recognized policy of custom, so you can recognize policy or custom, uh, meaning is like government invest money. Say in West Bengal, uh, Dasara in Durga Puja, Durga Ma is immersed in river. Okay, so on that very day, if government spend money in making Visarjan Ghat in river, the same may be acceptable. So this is recognized policy or custom. Okay, I think I'm clear to you. Rule 22. Rule 22 is expenditure from public funds. Okay, so expenditure from public funds. It says no authority may incur any expenditure or enter into any liability involving expenditure or transfer of money for investment deposit from public funds unless the same has been sanctioned by the competent authority. So you cannot make expenditure from public fund answer unless and until you get approval from competent authority. Okay, this is basically this rule 22. Then same rule 22. Rule 23. Delegation of financial powers. The financial powers of a government have been delegated to various subordinate authorities by delegation of financial power rules. So, according to delegation of finance DFPR 1978, okay, which is amended from time to time. The financial powers of the government which have not been delegated to a subordinate authority shall vest in the finance ministry. In case there is no delegation, there is confusion, we should always refer the case to finance ministry. After rule 22 is important rule is rule 25. Okay, provision of funds for sanction. So all sanctions to the expenditure shall indicate the details of provisions in the relevant grant or appropriation wherefrom such expenditure is to be made. So this is basically from a budget point of view. So whenever there is a provision for sanction, we have to give total head of account. Okay, we have to identify on the basis of head of account. We have already uh, we have already gone through it. So from appropriation, from we have learned this already. From appropriation, from where like for TE bill it is the objective primary unit of appropriation is 11, and for salary it is 01. So provision of funds, so wherever we will have to understand the provision of funds for sanction. All sanction to the expenditure shall indicate the details of provisions in the relevant grant or appropriation where from such expenditure is to be made, right? Okay, so we have to before let's suppose in medical we have seen the last digit is two digit of primary unit of appropriation is 06. So before and 06 we got 50,000. So before granting any bill, we have to see that whether there is fund available in 06 or not. For medical bill it is 06. For office expense it is 13. So we'll get to the this term head of account in detail in our upcoming classes when we will read and the book there is one book called appendix 5 to postal manual. So this is basically provision of funds for sanction. Okay, rule 25(2) is all proposals for sanction to expenditure shall indicate whether such expenditure can be made by varied appropriation or reappropriation. I have already mentioned where let's suppose in OE there is 50,000 and we got some medical bill. uh, Medical we don't have any, we do not have any fund. So it can be by the order of competent authority. It can be the some part of like 20,000 is required in medical. Okay, medical bill there 20,000 is required for medical bill. So since we do not have any amount in medical, so we can reappropriate from OE or other section also. So where the funds are lying pending, okay, unused. So either it can be by appropriation or from the reappropriation. By reappropriation means transfer of fund. We have already discussed. So again, this thing we will be discussing again in our next topic when we will read budget section. Okay. Then Rule 26. Rule 26 is basically the duties of responsibilities of a controlling officer in respect of funds placed at his disposal. So uh, these are some basic thing. So he should ensure that the funds allocated to him does not exceed the budgetary allocation. Obviously, is the funds which are placed at his disposal is incurred for the purpose for which the funds have been provided. So for medical bill there is funds are there are 20,000 funds. So these funds cannot be used for other purpose like uh, T you cannot use. It can be used only by reappropriation. I've already told reappropriation by by getting approval, only after getting approval from the competent authority. You cannot simply transfer any fund from one primary unit of appropriation to another. Okay. So you should also ensure that it is incurred in public interest. So everything we do it for the public interest only. Okay. So there is existence of adequate control mechanism. Okay. So there should be a control mechanism should be there, so that wastage of any expenditure uh, there should not be any waste or loss of public money actually. So adequate control mechanism is actually for detection of any error detection, irregularities, etc. So there should be a control mechanism for this, so that waste and loss of public money could not happen, cannot happen. Okay. And so next is our Rule 27. Rule 27 is date of effect of sanction. So whenever there is, we see the in sanction memo, there is one date is mentioned. Always date is mentioned. So basically, sanction or order shall come into a force from the date of date of issue. So we will consider date of issue as a date of effect. Okay, unless any other date from which they will shall come into force is specified therein. If the in sanction memo, apart from date of issue, uh, apart from date of issue, if there is any specifically it is written that this sanction will be applicable from this date. So then we'll consider the on that date only. Okay. So next is our Rule 29. So Rule 29 says the procedure of communication of sanction. All financial sanctions and orders issued by the competent authority shall be communicated to the audit officer and accounts officer. So whenever there is a sanction coming from your competent authority, like CPMG has sanctions something for the divisions. Okay, so division has to communicate this to audit and accounts officer, so that he may get aware of it. Okay, so this is the rule. So always exceptions are important in this topic. In Rule 29, there are some sanctions which may not be endorsed to audit officer. This may not be sent. So what are these we have to learn? Like sanction relating to grant to advances to central government employees. Earlier we used to have festival advance. Okay, so T advance. So this T advance, festival advance need not be sent to accounts officer. Next is sanction relating to appointment. So appointment section is dealt by uh, uh, appointment transfer. These things may not be sent to audit officer. We generally do not send from account. Whoever is working in HO in account branch, they know that for any appointment, for any promotion, we do not give anything to audit officer. We do not send anything to DAP. Likewise, all sanctions relating to creation or continuation or abolition of posts, these matters may not be sent to audit officer. Should not be endorsed to audit officer. Okay. Likewise, charge reports are also not sent. So sanction or handing over of sanction for handling over of charge, taking over charge, like sanction relating to payment or withdrawal from GPF advance. This thing we do not generally send to audit officer. So this thing we should understand. Other sanctions, routine nature issued by the heads of the subordinate officers, other than those issued by the ministry. These things sanctions related to contingent expenditure. So contingent expenditure, sanction of the contingent expenditure are generally not sent. Okay. Rule 29. After that, Rule 30. Rule 30 is lapse of sanction. So they suppose one sanction memo is prepared on, let's suppose 1/1/2022. So when the sanction will get lapsed. So this thing we have to learn. So generally it is valid for a period of 12 months, okay, from the date of issue of sanction. Provided that the exceptions are always important, we have to go through. So here, the lapse of sanction when the period of currency of the sanction is prescribed in the departmental regulations or specified in the sanction itself. If there is a department rule that it is only valid for 3 months, so in that case we will consider 3 months, or is specified in the sanction itself. In sanction itself, it says that it is going to valid for 1 month, so we have to consider 1 month. Other than generally we take 12 months. Okay. Next point is when there is a specific provision in the sanction that the expenditure will be made from budget. So budget related. Let's suppose in February some budget has been allotted. So this is obviously that financial year starts from 1st April. We know 1st April, and ends with 31st March. Okay. So in February, there is budget related items. So budget related items are always closed down on 31st March. Okay. So budget portion of a specific sanction that the expenditure would be made from budget provision of a specified financial year. Yeah, it shall lapse at the close of that financial year. Okay. Third is in case of purchase of store. In case of purchase of store, sanctions shall not lapse. Shall not lapse if the tenders have been accepted or that indent has been placed on the CPO, Central Purchase Organization, within the period of 1 year of the date of issue of that sanction. If the order has been made, then it will not lapse, even if the actual payment or whole or part has not been made during the said period. So, in case of order in CPO, or in case of order in GEM, if we order the same, this will not lapse actually. So within the period of 1 year, if the order has been made, then whether the actual payment is made or not, it will not have any effect. So the lapse of sanction is done. Then rule 33. Rule 33 is basically report of losses. When there is a loss, any loss or shortage of public money, there is if there is a fraud, anything, all this comes under the definition of loss. So any loss or shortage of public money, departmental revenue or received stamps or opium stores, other property held by or on behalf of government, irrespective of the cause of the loss and the manner of detection, shall immediately be reported by the subordinate authority to the concerned next higher authority, as well as to the statutory audit officer and to the concerned principal accounts officer. So in post office, let's suppose a theft has been took place in any sub office. So inspector will immediately, IP will immediately report to superintendent, and superintendent will report to his next higher authority. And in this way, the same report has to be sent to accounts office also, DAP, and then from there it will go to DOP headquarter also, principal accounts office, concert principal accounts officer. Okay. Even when the such loss has been made good by the party involving it, even if the loss has been made good, but you have to report. So here also there are few exceptions to it, so we have to understand. Cases involving losses of revenue due to a mistake in assessment which are discovered too late to permit a supplementary claim being made. Okay. So here basically too late to permit a supplementary grant means, let's say we are building an office, okay, and we expected suppose 10 lakhs will be sufficient for making this building, okay. So accordingly, we proposed the fund and we got in budget, we have been allotted 10 lakhs. Now at the near completion of the building, like say for situation may arise, like we fall short of just like 25,000. So in this case, we are left with no money. Then the situation is that we have to wait for budget allocation for the next year. So in this way, just because of our mistaken assessment of actual expenditure, the building that was to be completed could not be completed on that very financial year. So this is kind of obvious loss, okay, that actually not required to be reported. So as we know that again budget will be allotted next year and we can complete this accordingly. So this is example of mistaken assessment which are discovered too late. So next is under assessment which are due to interpretation of law by the local authority being overruled by higher authority after the expiry of the time limit prescribed under the law. To understand this, uh, let us give an example like say for time but tabling allowance bill, okay, TA. So generally TA bill is 15 days time is given for TA bill submission. So let take the case that at first it is the table has been one employee has submitted after 15 days and this has been disallowed by the local authority. Say superintendent has disallowed it. Then let's suppose employee has preferred the claim to the DPS or PMG, the higher authority, and from there anyhow by misinterpretation, like say he is the competent authority, so suppose the bill was passed. So this may be there is a you can say there is a loss, but uh, due to interpretation of, so the higher authority has preferred the bill, okay. So the next point is refunds allowed on the ground that the claims were time barred. Okay. So in this case, loss. Take an example like uh, in post office we book speed post. Okay, and for speed post the delivery norm is generally 72 hours. So it is time it is time bound. So whenever a speed post is delivered after the time, then post office is liable to incur the charges. So the particular person may claim the amount. And earlier I have seen that it was allowed. Some people used to book the speed post, and if it delivers after 72 hours, they used to claim and they used to get refund. And the last is petty claim losses of value not exceeding 10,000. So up to 10,000 rupees loss should not be reported. Okay, may not be reported. So rule 33 says, 2 says, cases involving serious irregularities shall be brought to the notice of financial advisor or chief accounting authority of the department. So chief of accounting authority is always secretary of the concerned department. Okay, concerned department. This we have to remember. So when there is serious irregularity is there, it shall be brought to notice of secretary of the concerned department or his financial advisor, FA, and the CGA of the Ministry of Finance, Controller General of Accounts. CGA is Controller General of Accounts. So Rule 33(7) is also important. It says all cases involving loss of a government money arising from erroneous and irregular issue of checks, irregular accounting of receipts will be reported to the CGA along with the circumstances leading to loss, so that he can take steps to remedy defects in rules or procedures, if any, connected therewith. So if there is a system related issue, you will check on system related issue. There is loophole in system. And this should be dealt with like this. That in case of loss of government arising erroneous or irregular issue of check, how the irregular check could be issued from the system. So this thing they will revise the rules and procedure according to this. Okay. So this thing we have to report to CGA. The question may come like this: what are, in which condition the report has to be invariably sent to CGA? So first there is this condition, and there is one more. So rule 36 says report to audit and accounts officer. So after full inquiry as to the cause and extent of loss has been made, the detailed report should always be sent to by the subordinate authority to government. Okay, government has to be informed through proper channel, and a copy of the report thereof being simultaneously forwarded to the audit officer and pay and accounts officer. So it's in postal it should be sent, or pay and PO means DAP. India. Next, moving further, rule 36, then rule 37. So rule 37 says an officer shall be held responsible for any loss sustained by the government through fraud or negligence on his parts established through department inquiry. That we know, always know. Then whenever there is a fraud or negligence, we'll look for the person responsible for it, and through departmental inquiry. Okay. Rule 38 says prompt disposal of the case of loss. Okay, prompt disposal of the loss. So action at each stage of detection, reporting, write-off, final disposal in case of losses, including action against the delinquents. Delinquents means person responsible for loss, and remedial measures. Okay, remedial measures should be should be completed promptly. Okay, quickly. It should be done quickly as far as possible, with special attention to action against delinquents and remedial measures taken to strengthen the control system. Strengthen the control system. So it should not be delayed actually. Promptly disposed. It should be the disposal of the case of loss should be disposed of with promptness. Rule 39 says the demand for information by audit and accounts officer. Whenever there is a demand for information by audit or accounts officer, the subordinate officer shall afford all reasonable facility. Okay, all reasonable facility to the audit or accounts officer. Mm. Next is our next chapter is our budget formulation and implementation. This is very important chapter. So, in budget formulation, first we know that what is financial year. So financial year start with first day of April of each year and ends on the 31st day of March of the following year, next year. Okay. So according to rule 43.1, presentation of budget to parliament. Okay. So it is written like, in accordance with the provision of article 112 of the constitution, the finance minister shall arrange to lay before both the houses of parliament an annual financial statement, also known as the budget. So budget is presented by the finance minister, showing what are the contents of the budget, showing the estimated receipts and expenditure. Estimated means expected receipt, what may be received, what might be received during the year, the expected receipt and expected expenditure of the central government in respect of the financial year before the commencement of that year. Okay. So under rule 44, the contents of the budget are estimates of all revenues expected to be raised during the financial year. Whatever the revenues to be earned, that is to be included in budget, and also the estimates of expenditure, that is what are the money to be what are the different occasions on which money we are going to spend for each program, scheme, project in that financial year, also has to be included in the budget. So thirdly, estimates of all interest, debt servicing charges, any repayment of on loans in that financial year. Let's have repayment of loan. Suppose the country has taken loan from World Bank. Let's suppose this has to be repaid now. This will also be included in the budget for in expenditure side, or any other information as they may prescribe. Okay. Rule 43. Then Rule 45. Okay. So Rule 45 says about receipt estimate. The detailed estimates of the receipt shall be prepared by the estimating authority separately for each measure head. We have already seen that the 15 under the each there is each head, in each head of account there is measure head, minor head, subhead, detailed head is there. We have already discussed it about. So, the estimates of receipts will be separately be segregated through each measure head. For each measure head, the estimating authority shall give breakup of minor head, subhead, detail heads, everything, object head, along with the actuals of the past 3 years. Okay, so it may be like through speed post revenue in year 2019, 200 crore was received. In 2020, 2006 crore received. 2000, so in 2023, uh, sales about 200 crore, 10 crore is expected to be received. So we have to give the actual figures of the past 3 years along with the received estimates. Okay. So next rule is rule 47 is user charges. So user charges is an important component of the non-tax revenue. We have seen that there is a tax revenue. Tax revenue is GST, then income tax. These are tax revenue. So the user charges are basically non-tax revenue, fall in the category of non-tax revenue. So each ministry and department may undertake an exercise to identify the user charges levied by it and publish the same on its website. Let's suppose for speed post, the charges is we generally know that it is generally for 41 rupees. Basic rate is 41 rupees. So so while fixing the rate of the user charges, the ministry and departments must ensure that the user charges recover the current cost of providing the service with reasonable return on capital investment. Okay, so so by while fixing the 41 rupees charges, the department should see to it that the that that by fixing the charges, the department should not incur any loss. So we know that for speed post, the speed posts are generally sent through air. So so any increase in fuel, air fuel, will result to loss. So we have to check on increase of air fuels. If there is any drastic increase in air fuel, then the speed put charges also may have to be raised. Okay. So any deviation from this principle shall be specified, recorded with reason justifying the setting of user charges uh, lower than the cost recovery norms. Let's suppose we have fixed the rupees 41. We have for from 41 rupees charges, we have fixed the charges to 35 rupees. If we do this, if we lower this, then it should be, there should be reason. We have to justify the reason why we have lowered the prices. Okay. The rates of the user charges should be linked with appropriate price indices that I have already told now. So it will be linked with the price indices and reviewed at least every 3 years. Okay, so every 3 years the user charges has to be reviewed. The example of sweet post I have given just to understand for easy understanding. Okay, in order to enable and ease the revision of user charges, the rate of user charges shall be fixed wherever possible through rules and executive orders. Okay, through rules and not through statutes. So not through statutes means by law we statute means every year we are let's suppose 1% is increased. The next year also 1% has to be increased. This thing should not be done. So we have to go in practical. Okay, in practical scenario. So in some cases, the speed post charges may be raised, have to be raised by 5% also. So because of the drastic changes of hiking of fuel charges. So this is it. Then next is our rule 50 is expenditure estimate. Like receipt estimate, there is expenditure estimate. So in expenditure estimate, it is written like the expenditure estimate shall show separately the sums required to meet the expenditures for charged and charged on the consolidated fund of India under 112(3) of the Constitution and the sums required to meet the expenditure for which vote on Lok Sabha is required under Article 103(2) of the Constitution. So in expenditure estimate, first we have to segregate the expenditure on charged and voted. Okay. So, so there are two categories of expenditure. One is called charged. One is called voted. So generally, all the expenditure are categorized in voted category. So voted category are those expenditure where vote of Lok Sabha is required actually, and charged in the charged category means in the expenditure like salary of High Court judges, Supreme Court judges, salary of president. These are all the expenditure that are already fixed and charged. Okay, there is no confusion. There is no voting is required for getting those passed through our budget. Okay, except this, every expenditure has to be voted. So in our case, I have seen that one thing that is already charged it fall in the category of charge expenditure is GPF interest. People generally the people the employee who deposit in GPF they get interest now. So the interest section interest is fallen in the category of charge. Other than except this, all the expenditures are fall in the category of voted. Okay. So rule 52 says the estimates shall also distinguish. First, we have to segregate on the basis of charge and voted. Then we have to segregate on the basis of revenue expenditure and capital expenditure. Okay. So revenue expenditure are we generally know that there is revenue expenditure and there is capital expenditure. Capital expenditure is generally long-term expenditure. Long-term expenditure. Generally, the expenditure we generally uh, spend. If we spend, let's suppose we go to bazaar. Okay, we go to market and we buy one fridge. The fridge is for more than 1 year, na? 1 year, it will go for 1 year, 2 year, 3 year, 5 year, like this. So it is kind of capital expenditure. Revenue expenditure in simple sense, like from market, if we buy rice for everyday use, so this thing will come into the category of revenue. So in detail we will be discussing the revenue and capital in the later classes. Okay, so first we have to give breakup on charge and budget, then we'll give breakup on revenue expenditure and capital expenditure. Okay, next, according to Rule 53 says the detailed estimates of expenditure shall be prepared by the estimating authority up to the final unit of appropriation. Again, the term final unit of appropriation comes. So this is very, very important. The six-tier classification, which we have already discussed. So the estimation will be done up to the from measure head till the final unit of appropriation. That is objected. Okay, on both revenue and capital expenditure. So estimates shall include suitable provision for liabilities of the previous years that is to be discharged. The estimate will also, let's suppose for budget of 2023, let's suppose there was a pending liability of 50,000 for for a particular case. So the pending dues will also be included in the budget of current year budget. Okay. In Rule 54 says the estimates of scheme related and other expenditure shall be processed in consultation with budget division of the Ministry of Finance in accordance with the instruction issued by it. So for any scheme related issue, so DOE has to be consulted. Department of Expenditure, Ministry of Finance has to be consulted. In there is budget division is there, so it has to be consulted. So Rule 50 also says the revised and budget estimates of both revenue and capital expenditure after being scrutinized by the financial advisor and approved by the secretary of the administrative ministry or department concerned shall be forwarded to the budget division. Two kind of estimates are presented. One is revised estimate, one is budget estimate. Okay, so whenever we present the estimates, first it will be scrutinized by the financial advisor. So in secretary of post, in secretary level, secretary of concerned department, secretary of the department is the chief accounting authority. Okay, under him there is a financial advisor, FA is there. So like for in circle we got CIFA, Chief Integrated Financial Advisor. In region, like in PMG offices, there is RIFA, Regional Integrated Financial Advisor. So they financially advise them actually. Okay. So first, the financial advisor will scrutinize our estimates. Whenever we send some estimate that for TE bill, suppose 5 lakh is required, so we'll send first. It will be scrutinized by the financial advisor of the secretary of the department, like that is chief accounting authority. Financial advisor will be scrutinizing it. Then it will after scrutinization, it will get approved by the chief accounting authority. Okay, and then it will be forwarded to the ministry, that is budget division in the Ministry of the Finance. Next is our Rule 51 is demand for grants. So after budget is passed, then then voting of Lok Sabha is required actually. Voting at Lok Sabha. Lok Sabha is required for granting the money. So this is done in the form of demand for grants. So the expenditure for which vote of Lok Sabha is required shall be in the form of demand for grants. Next, generally one demand for grant is presented in respect of each ministry or department. However, in respect of large ministry or departments, more than one demand for grant may be presented. So, for a particular department, let's suppose for the Department of Post, DOP, DOP, there is railway department. Okay, so railway department. Suppose railway department is very big department. So one demand for it is generally presented for large department. It may be 2 3 demand for grant may be placed. Okay, so each demand normally includes provisions required for a service, that is provision on account of revenue expenditure, capital expenditure, grant to the state. Everything has to be segregated and in the demand for grant. Okay, rule 51(3) says the demands for grants shall be presented to the parliament at two levels. The first, it has to be go through DRSC. Okay, DRSC is called uh, departmentally related standing committee. Okay, whenever uh, we apply for budget estimates. Okay, we give BE budget estimates that we need 5 lakh rupees. So first it has to be passed through departmentally related standing committee, DRSC, of the parliament. Okay, and then after passing through DRSC, then it will be presented to the parliament by finance minister. Okay, along with the annual financial statement. Annual financial statement is our budget. So again, I am reading this. The demand for grants shall be presented to Parliament at two levels. Okay. The main demand, main that is second, se- the main. The first it will be going through departmentally related standing committee of the Parliament. Okay, and then it will be after that, after getting it passed, it will be presented to. Hello. Okay. Someone is asking question. Janvi Pavaskar. Hello.
ला आहे ओपनिंग घ्यायचंय का हा ना म्हटलं
Hello.
घ्यायचंय का
Hello. Hello. Please ask the question. Preeta Sharma. Hello. Am I audible? I'm not hearing anything. Preeta Sharma ji, please tell. What is your question? Okay, going back. Okay, going back. After Rule 51(3), there is one term is called vote on account. Okay. Wait. So, if the appropriation bill is seeking authorization of the parliament to make expenditure in consonance with the budget proposal is likely to be passed after the start of financial year to which it corresponds, then pending the completion of the procedure prescribed in the Article 113 of the Constitution for the passing of the budget, the Finance Ministry may need to obtain vote on account to cover the expenditure for a brief period in accordance with the provision of Article 116. Wait, we are going with Rule 51.3. Okay. For after Rule 51.3, there is outcome budget. We have to go through first. So in outcome budget, when budget is finalized, so after that department of expenditure, the department of expenditure will consult with Niti Aayog. Okay, the Niti Aayog was now it is Niti Aayog. Formerly, it was called the Planning Commission India. So after the budget is finalized, so like 50 lakhs will be allotted to Department of Post. Okay, so after the finalization of budget, the Department of Expenditure will consult with Niti Aayog, that is Planning Commission of India, and the department for which the budget is allotted, and then they will prepare an outcome budget statement. Okay, in the statement there will be some parameters and deliverables. The like targets are fixed in a statement called medium term expenditure framework statement. Let us read the uh, let us read. After finalization of the estimate for budgetary allocation, the Department of Expenditure, in consultation with Niti Aayog and the concerned ministry, shall prepare an outcome budget statement linking the outlays against each scheme project with the outputs, deliverables, and medium-term outcomes. Okay, the outputs and deliverables shall be mandatorily be given in the measurable and quantitative terms on the basis of parameters and deliverables. This is important. Parameters and deliverables decided in advance on the basis of projection made in the medium-term expenditure framework statement. Allocation for each scheme project shall be against a form set by deliverables which shall be adhered to. The performance against the specified outcomes would form the basis of deciding on the continuation of the scheme and the quantum of the budget allocation. Uh, to clear this out, let me give one example. Okay, so let's say for an example, we are building a 7-story building. Okay, there is a 7-story building. We have to construct. Okay, so it had begun its construction, say in 2018. So every year budget will be passed for some amount. Like the whole estimate was for 700 crore. So every year 100 crore will be passed from the budget from budget. So for passing the budget, before allotting the fund, actually. Okay, so they will give some targets like by the end of fifth year, like by 2023, the fifth story has to be completed, or fifth story of the building or sixth-story building has to be completed. Otherwise, fund will not be released. So, according to medium-term expenditure framework statement, the budget, the outcome budget will be finalized. Okay. So so in the last line, it says that the performance against specified outcomes would form the basis of deciding on the continuation of the scheme and the quantum of budget allocation. They may reduce, they may enhance, or they may just close the entire process of. Okay, they may not release the fund if the in if according to medium term expenditure framework statement, it is found that the work is not satisfactory. So outcome budget is important. Okay. Then is our vote of account. Okay, vote on account. So before uh, getting into vote on account, let us uh, give a brief on entire budget process. Okay, so if I give the entire process of budget, then you will understand what is vote on account, what is supplementary grant. So I will give a simple example. What is budget is basically. So let me take a blank page, okay, for easy way understanding. So budget comes, we have seen that budget comes under 112, okay. So in simple sense, let us understand the whole process of budget, okay. Budget is basically a promise actually. It is a promise or a speech, like a minister is my minister in his speech saying that we'll do we will make we will make another Taj Mahal. Suppose another Taj Mahal in this year if you give vote. So in this the promise is basically the budget. So let me uh, give an example. Like I want a car for my birthday, okay, and my father has agreed that he will give me a car. So he has agreed, he has promised that he will give me the car. This is basically the budget. So this will come under the under Article 112. Okay, this is budget. So in practical, we see that just because my father has agreed, will I get the car? Of course, it is no, because for car my father needs money, and he should find out the ways to get those money, and also he will consult my mother that whether I should be given or not. So my mother's agreement is also crucial here. So in this process, when my father consults with my mother, and find out ways to for the money that is needed for getting the amount required for card. It is comes under the term called demand for grant. Demand for grant. Actually, in demand for grant, we have seen that voting in Lok Sabha is required. So both the central and opposition opposition discuss on the amount. Like say in budget, 700 crore was estimated to be required for a particular scheme, but in during demand for grant session, in Lok Sabha, it is seen that no, 700 crore is very big. Only 300 crore is required. So after that, only 300 crore will be released. So demand after budget, demand for grant is important. So my consultation with my mother by my father may be treated as demand for grant. I think I'm getting understandable. Next, uh, next is when my money is finally allotted for my car, it is called appropriation bill is passed. So another term is appropriation bill. It comes under the Article 114, appropriation bill. Actually it is the appropriation bill when after that we can say that Yes, the budgetary promise has been proved. Means on budget, if the finance minister declared that 300 crore has to be given to Department of Post, so if the appropriation bill is passed on 300 crore, then and only we can say that yes, the 300 crore will be passed. So that for appropriation bill has to be passed, demand for grant, it has to be first processed through demand for grant. So I have got the money for my card. That means the appropriation bill has been passed. Okay. So after that, there is another term is called supplementary grant under 115 article. Supplementary grant. Okay. So what is supplementary grant? So let's say I need a speaker to be installed in my car. So for that I need additional fund. That means I need additional money. So my process of granting additional money will be known as supplementary grant. This is the additional money I required. So in the budget session, 300 crore was allotted for a particular scheme for let's suppose for building a bridge, for construction of one bridge. So after spending 300 crore, it is in that additional 2 crore is also required. So for additional 2 crore, another demand for grant has to be processed. So after that, 2 crore appropriation bill will be passed. So 2 crore has been additionally required on that scheme now. So it is comes under supplementary grant. Just like in my car, suppose 2 lakh was allotted, 2 lakh rupees was allotted. So for that, I needed another 15,000. Suppose uh, for installation of speaker, 15,000. So the supplementary grant has to be passed for getting this amount, and this comes under article 115. And next is our vote on account. Okay, okay, vote on account. For easy way of understanding, the vote on account. What is the vote on account? Suppose in the same story, if I feed vote on account, it will go like this. Say I suddenly require the money as, uh, let's say, one of my car's tire got punctured. So now I know that without my mother's consultation, that means without demand for grant, that means discussion. Without discussion, I cannot get those money. For supplementary also discussion is required. So discussion is very time taking, time consuming, I know. So and in the emergency situation, and the money is needed in emergency situation, as my car's tire got punctured. So now I know that my mother's consultation is required. And let's suppose my mother has gone for vacation. Let's suppose. So in this situation, I cannot wait for her, as she will take some time to come back. So in this very situation, what I will do, I will request my father to consider the genuineness of the situation, and I will and he will do what? He will bifurcate my mother's approval. Okay, requirement of this demand for grant. So basically, in vote on account, due to emergency or exigency, the center passes the bill with his own power. He will not discuss with opposition party. And this is basically vote on account. So going back, it will be, I have put an example so that it will be easier for you to understand. Okay. So let me go back. So here is the vote on account. So it says if the appropriation bill, that is appropriation bill is comes under 114, we have seen, seeking the authorization of the parliament to make expenditure in the consonance of the budget, proposal is likely to be passed after the start of the financial year. Means another budget has to be passed. So it is likely to be passed after the financial year. So in this very financial year, the fund is not allotted. So obviously, we have to wait for the next financial year. Then pending the completion of the procedure of prescribed in 113, we have seen the 113 is demand for grant. Demand for grant, where voting in Lok Sabha is compulsory. So pending the completion voting in Lok Sabha. So it says that pending the completion of the procedure prescribed in 113, there is lengthy procedure of the constitution for passing the budget, the finance ministry may need to obtain vote on account. If we obtain vote on account, there will be no need of demand for grant. Okay, discussion. May need to obtain vote on account to cover the expenditure for a brief period in accordance with the provision of Article 116. We have already discussed under 116, vote on account is passed. Funds made available under the vote on account are not to be utilized for expenditure on new service. We have seen that for existing service only, the vote on account has to be passed. For new services like opening of in the middle of the year, India Post Payment Bank has to be opened. Let's suppose for new scheme. So in this case, in this situation, fund should not be allotted under the vote on account. It should be always through demand for grant. It has to be go through the process of demand for grant. That means either supplementary grant has to be passed, or you have to take advance from contingency fund. So there is another fund is contingency fund. So in suddenness, we can borrow money from contingency fund. So in contingency fund, we cannot withdraw money. We have to borrow the money. Means the contingency fund has to be replenished. This is just an additional information I have given. Now, under Rule 56, communication and distribution of grants and appropriation. So, after the appropriation bill relating to a budget is passed, after the appropriation bill, we already seen that appropriation bill 114. Okay. So, after the appropriation bill is passed, the finance ministry shall communicate. Department of Expenditure will communicate to concerned ministry like DOP, Department of Post. Okay, so who shall in turn shall distribute the same to subordinate fund information from Department Post. It will come to Circle Office. From Circle Office, it will come to Division Office like this. The budget allocation will be the information related to budget allocation will be passed like this. Okay, the distribution so made shall also be communicated to the respective PO. So this information has to be also be informed to DAP. Okay, so that he can look after the budget. So like 50,000 has been allotted for TA bill. So he will pass down the information to division office. So DAP will also look after that above 50,000 should not be expensed. So if it falls in the notice of DAP, he will quickly pass the information to the controlling officer. So Rule 56. After this, Rule 56 is our Rule 57. Rule 57 is responsibility for control of expenditure. So, who is the responsible for the control of expenditure? So, the main responsibility for control of expenditure will be on the controlling officer. Okay. So the departments of the central government shall be responsible for control of the expenditure against sanctioned grants and appropriation placed at their disposal. The control shall be exercised through the head of the department, HOD, who is the controlling officer, and other controlling officer, if any, and the disbursing officer subordinate to that. Disbursing officer. Disbursing officer. Like in our case, HOD is our CPMG. In circle office and disbursing officer is superintendent. So those are responsible for control of expenditure. Rule 57.4 to have an effective control over expenditure by the department, the controlling and disbursing officer subordinate to them shall follow the procedure as given. So to have effective control over expenditure, the process is like this. For drawal of money, the DDO, that is drawing and disbursing officer. So this is important from the exam point of view. What are the duties of DDO? What are the duties of DDO in connection with uh, control management, control over expenditure? So what is the role of DDO? DDO will prepare and present the bill for charge and voted expenditure. We already discussed that whenever the account is generally segregated in two parts. Always it should be charge and voted. Okay. Then enter on each bill the complete account classification from the major head down to the object head. So 6-tier classification. He has to segregate the head of account into 6-tier classification from major head, minor head, subhead, detail head, object head, like this. Enter on each bill the progressive total of expenditure up to the date under the primary unit of appropriation. So last state is primary unit of appropriation is our object head. So progressive total, like for salary, suppose up to October this much amount has been spent, and okay. So moving further, so for control of expenditure, basically the every DDO actually, all drawing and disbursing officer shall maintain a separate register in form GFR 5. Okay, GFR 5. Physically and electronically for allocation of under each minor subhead of account with which they are concerned. So DDO will maintain one register called GFR for every expenditure. Okay. Now, like DDO, let's suppose division office. Okay. Division office will maintain a GFR 5 for every expenditure. Likewise, circle office will maintain one broadsheet. Okay. This is broadsheet. This is GFR 6. Circle office will maintain a broadsheet GFR 6. Okay. So, like there are various divisions under one circle office. Okay. So they will maintain the receipt of all GFRs from each divisions. Okay. So after that, after getting this GFR 6, so as a DDO also, circle office will also have to maintain his own GFR 5. Okay. So after the making entry into the in GFR 6 in broadsheet, he will then scrutinize and see if it is properly done or not. Okay. Then he will compile a statement. From this, he will compile a statement called GFR 7. It is a statement. He will compile a statement. So after compilation of statement, he will prepare a consolidated account. He will prepare a consolidated account. Consolidated account. Account consolidated. Okay. Consolidated account in the form of GFR 8. So what is the content of GFR? GFR will simply show the how much budget is utilized, how much budget is utilized up to a particular month. Okay, under a particular head of account. For like for entire circle for office expense, this much amount has been up to let's suppose it is uh, now it is January na, so for December 2022 in office expense for entire circle 5 crore has been spent. So this GFR will be sent to concerned ministry, Department of Post. From our end, it will go to Department of Post. So concerned ministry or department on 15th of every month. Okay. So basically, now we see that everything is written here. Like, now we see that all divisions are sending GFR 5 to circle office. Okay. And we know that monthly accounts from each HOs are also been sent to DAP, means accounts office. So reports GFR 5 is getting from circle office, is getting GFR 5 from all division office, and all HOs are also sending the same same expenditure amount of expenditure to DAP. The information is passed to DAP. So after that, DAP will pass the information to circle office. So circle office will actually tally the way the figures of this and this. The division may give the figure that office expense has been utilized for 5 lakh. Okay, and then DAP gives the figure. You will get the figures from HOs na. So he gives like 5.5 has been already utilized. So there is a discrepancy. So it can be reconciled. So circle office will reconcile the amount that there is a problem in accounting. So in this way, there is uh, a control of our expenditure is done. Okay. Okay, then next rule is rule 58. Rule 58 says the maintenance of liability register for affecting proper control over expenditure. In order to maintain a proper control over expenditure, a controlling officer shall obtain from the spending authorities liability statement in form GFR 3. So GFR 3 is basically the liability statement. So GFR 3, okay. So GFR 3, every month starting from the month of October in each financial year, the control officer shall so in GFR 3, So each division office maintains a GFR 3. Okay. So GFR 3A, GFR 3 is maintained by every spending authority. Okay. So the division office will give in means pass the information that this like there is 5 lakh rupees at our hand uh, in in medical bill. So the division office will give the possibility that yes, the 5 lakhs is needed to be at our hand, so that it is expected that there is some bill to be processed in the upcoming months. So the liability statement has to be given for the amount placed at our disposal. Rule 60 is the control of expenditure against grant, appropriation, and ultimate responsibility of the authority administrating it. So, who is the ultimately responsible for the control of expenditure? So, in this, the accounts officer shall report to the head of the department concerned immediately on the first appearance of any disappropriate expenditure. I've already mentioned that DAP pass the information to circle office. So like this, so accounts officer DAP will report to the head of the department like circle office concerned immediately on the first appearance of any disproportionate expenditure. So, however, the authority administering the grant or appropriation is ultimately responsible for the control of expenditure. That means DAP is not responsible. Ultimately, who is responsible? The authority administrating the expenditure, like circle office and division office, will be held responsible for any disappropriation of expenditure. Rule 61 says excess expenditure. So accounts officer will not allow any excess expenditure. So whenever excess expenditure is required, whenever there is excess expenditure required, the financial advisor and the chief accounting authority will first ensure that. Let's suppose first I have to read this. The accounts officer shall not allow any payment against sanction in excess of the budgeted provision unless there is a specific approval of the chief accounting authority. So, secretary of the concerned department is the chief accounting authority. We know. So he can give approval for only he can give approval for excess expenditure. Okay. Suppose in office expense objected office expense we have 50,000 rupees. Okay. So we cannot spend above 50,000. We can spend above 50,000 only after getting the approval from the secretary level. Okay, chief accounting authority. So now before giving approval of additional amount of above 50,000, let's suppose 55,000 is required in our division office. Okay, 5,000 additional amount is division required. So for 5,000 we have been allotted rupees 5,000 under B budget estimate. Okay, so for additional fund place will will send revised estimate. This is revised estimate. So we'll send revised estimate of rupees 55,000. Okay, so for 5,000 additional amount is required, so we'll send the revised estimate of 55,000. So for additional requirement of 5,000, the financial advisor of the chief accounting authority, both of them before recording concurrence of the excess grant, before concurring the rupees 5,000 to us, like our case 5,000 is required, you will first ensure that there is available fund is there for reappropriation. Reappropriation means we have already said that, like in our in in our circle, in our division 5,000 is there. Okay, 5,000 is required. So there may be another circle who is extra 5,000 not usable left in their hand. So secretary may reappropriate the fund from this circle to our circle. Okay, or he may allow the reappropriation in the term office expense to medical expense or this thing. Okay, so competent authority or the secretary of post can secretary of post will see that whether the money can be money can be given through reappropriation or supplementary demand for grants. So we have seen already that if the amount is not available through reappropriation, then supplementary grant has to be passed, and he will request to the Department of Expenditure, Ministry of Finance for he will propose to them for supplementary grant. So excess expenditure is strictly avoided. It can be done by the competent authority only. Next is Rule 62. Rule 62 is our surrender of savings. So Department of Central Government shall surrender to the Finance Ministry by the date specified by that ministry before the close of the financial year. All the anticipated savings noticed in the grants of or appropriation controlled by them. The Finance Ministry shall communicate the acceptance of such surrenders as are accepted by it to the accounts officer before the close of the year. So before the close of the financial, let's suppose we have this is February 2023. Okay, so the financial year is closing by 31st March. So the finance ministry will fix the date like by 22nd February. You have to analyze. You have to analyze that the fund placed at your disposal is will be required or not. Okay. So we have office expense of 10 lakhs rupees placed in our hand, and we anticipate that only 2 lakhs will be sufficient for the upcoming need. So 8 lakh rupees may be surrendered on by 22nd February. Okay. So after the budget class, we'll be closing the session. Okay, for today. We have 2-3 more rules to left to be discussed. Then we'll close the session. Okay, for today. So next is Rule 62. The savings as well as provisions that cannot be profitably utilized shall be surrendered. Okay, to government immediately. They are foreseen without waiting till the end of the year. No saving shall be held in reserve for possible future access. So it says that we have got some amount that we anticipated that this is not at all required uh, uh, for disbursing any fund, like we have got some fund for let's suppose tea expenditure, and we anticipate that this is not at all required by the closing of this financial year. So without waiting for till the end of the financial year, that is 31st March, or finance ministry declared that one date, that is like the finance minister, we have seen that finance ministry declares a given date for submission of fund. So without waiting for the for that particular date, we can also surrender before that date also. That is say that immediately they are foreseen without waiting till the end of the financial year. So no saving shall be held in reserve for possible future expense. Rule 62 says that the rush of expenditure, particularly in the closing months of the financial year, shall be regarded as a breach of financial propriety. Okay, so you should not uh, spend money. We generally see that at the closing of each financial year, we uh, we spend too much money. So because we see that the fund at our disposal will be surrendered. So we start using the fund. So rushing of expenditure is actually breach of financial property, and it should be always be avoided. The financial advisors of the ministry and department shall ensure adherence to the stipulated monthly expenditure plan and the guidelines issued in this regard by the budget division department of expenditure from time to time. So quarterly budget expenditure statement is generally made. So by every 3 months, this much amount has to be spent this, so that rush of expenditure could be avoided at the end of each financial year. Okay, now now expenditure on new service. Okay, so no expenditure shall be incurred during a financial year on new service not contemplated in the annual budget for the year, except after obtaining supplementary grant or appropriation or advance from the contingency fund. I have already given an example of India Post Payment Bank. Now, so let's suppose India Post Payment Bank has been introduced on the month of October 2022. Let's suppose. So budget was passed. Let's suppose on February 2022. So all of a suddenness, there is an expenditure on new service that is called APP. So the rule says that no expenditure shall be incurred during the financial year. So means we have to wait for next financial year, or we can get the fund by obtaining supplementary grant. Okay, or appropriation or an advance from contingency fund. Okay. So we have also seen that for new service, expenditure on new service, we cannot use vote on account. This is an additional information I'm giving. So Rule 64 says the additional allotment for excess expenditure. A subordinate authority incurring the expenditure shall be responsible for seeing that allotment placed at its disposal is not exceeded. Where any excess over the allotment is apprehended, the subordinate authority shall obtain additional allotment before incurring the excess expenditure. For this purpose, the authority incurring the expenditure shall maintain a liability register. That is already we have discussed. Proceeding to Rule 65. Rule 65 says about reappropriation of fund. So we have already discussed that reappropriation, which is defined in DFPR 1978. Okay, so we know that 15-digit classification of particular head of account is there, and in the last 2 digit there is object head. So the funds are reappropriated from one primary unit to another, from OE to medical. This thing we have already discussed. Okay. So reappropriation of funds shall be made only when it is known that anticipated that appropriation for the unit from which funds are to be transferred shall not be utilized in full. Okay. So reappropriation is only made on the case that suppose there is OE, there is 10 lakhs rupees is there, and medical we need 2 lakhs rupees. So if it is confirmed that the out of this 10 lakhs, 2 lakh rupees will not be needed, so then and only we go for the preparation, and then this has to be done by the competent authority only. We cannot do this. So funds shall not be reappropriated from a unit of a unit with the intention of restoring the diverted appropriation to that unit when savings become available. We already discussed this. So after that, this is no. There is one more rule is there, I think. Okay, rule 65. Then rule 66. Rule 66 is our supplementary grant. So we have seen that under 115, it is if savings are not available within the grant to which the payment is required to be debited, or if the expenditure is on new service. We have already seen that for new service, supplementary grant can be taken. Okay. So under 115, necessary supplementary grant or appropriation in accordance with 115 of the Constitution shall be obtained before the payment. So rule 67 is advance from contingency fund. So contingency fund is defined under rule 67(1). Okay. So when it is taken advance, when need arises to incur the unforeseen expenditure in excess of the sanctioned grant, the unforeseen grant or appropriation or a new service not provided in the budget, there is no sufficient time for voting of the supplementary demand. We have already discussed that for both supplementary grant is usually supplementary demand is always takes place by demand for grant and process through demand for grant, which is under 113. The under demand for grant is basically discussion in both the in parliament. Okay, so it is time consuming. Okay, so for saving time, if there is no time, and this is the situation arises for unforeseen expenditure, we can take the advance from contingency fund. So basically contingency fund advance is taken. So means what, whenever fund is available, in the same amount has to be refunded back to the contingency fund. It has to be replenished. Okay. Next important rule is rule 70. That is simple. That is what are the duties and responsibility of chief accounting authority. So it says that the secretary of the ministry or department, who is the chief accounting authority of the ministry and department, shall what are the duties that he should be responsible and accountable for financial management of his ministry. Okay, he should ensure that public funds appropriated to the ministry or department are used for the purpose for which they were made. Okay, like this, he should be responsible for effective, efficient, and economical and transparent use of resources of the ministry or department in achieving the stated project objectives of that ministry and department, while is complying with the performance standard. This thing, these are the easy things. We have to remember. There are 12 rules are there. Okay, I think you people will go through it, and you will easily understand. So with this, let us close the session, and the next class will take place on Thursday. Okay, and we will be completing the whole GFR on Thursday. We'll aim to complete. Okay, so goodbye, friends.